Talks, I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, as deliberations on the 2026 national budget begins, the House of Representatives still has yet to issue guidelines on what civil society organizations can do to monitor budget transparency. We speak with one budget watchdog who's decided not to seek House accreditation, the co-convener of Social Watch Philippines, Jessica Jack Reyes Cantos. All 20 analysts in a Business World poll expect the Bangko Sentral to cut rates by 25 basis points to 5%. We get the lowdown from AP Securities stockbroker Caloy Capasillo. And the Securities and Exchange Commission stops the operations of 7 lending platforms. The House continues today its deliberations over the 6.793 trillion peso budget. The Committee on Appropriations will hear the proposed 2026 budget of the Civil Service Commission, Commission on Human Rights, and the Presidential Communications Office. The Philippine Business for Education has called on the government to invest more in students and human capital as the country is lagging behind its Southeast Asian neighbors. In a statement, PBED Executive Director Hannibal Camua lamented how education remains underinvested as the government allocates below the ideal 4 to 6% of the GDP in the sector. For the 2026 budget, the 1.1 trillion peso proposal in education translated only to 3.8% of the GDP. Camua said funds should be allocated where they're needed the most and asked Congress not to let insertions and inefficiencies eat into the education budget. Meanwhile, Mamamayang Liberal Party List Representative Laila de Lima is backing calls from budget watchdogs to set up an open transparency server with the media. She said the server will help the people track where their money is headed. This initiative will also prevent lawmakers from cutting funds to vital programs and transferring them to other items. Our first guest has opted not to seek accreditation in the House of Representatives budget accreditation process for civil service organizations in the deliberations of the 2026 National Expenditure Program. With us now for more is the co-convener of budget watchdog Social Watch Philippines, one of at least 20 watchdog member groups under the People's Budget Coalition, promoting the efficient and equitable use of public funds. Please welcome SWP co-convener Jessica Jack Reyes Cantos. Good to see you, Jack. Welcome to the program.
Good morning, Cathy. Thanks for having us.
So why has SWP decided not to seek accreditation?
Yes, we did. We didn't seek accreditation because we were just given an observer status. While our submissions can't be entered into the records of the House Committee on Appropriations and be part of their deliberations, it's on paper. We wish to have a chance to articulate our positions on a sectoral basis, which means being heard in the subcommittee levels. Let's say in the committee on in the subcommittee on agriculture, subcommittee on education, subcommittee on health, all these subcommittees, because we have several network organizations that do pencil pushing on the budget on this. What Congress intends to do is to actually just have one day, everyone gets to be invited. Not everyone, the accredited CSOs gets to be invited for a one-day hearing for our proposals. But, it takes, and the issues on agriculture, education, those gamut of issues need several days of deliberation. And
so what exactly, Jack, is the civil service organization asking for? Exactly how do you intend to execute if indeed you weren't just given observer status? Are you hoping to put in maybe some resource persons into the hearing?
Yes. Yes, we wish to be treated like resource persons, similar to what is happening in other regular committees of Congress. Congress has a regular committee on agriculture, committee on ways and means. In there, CSOs, civil society organizations, think tanks are invited to give inputs on what they think on the proposed legislation. The budget is a proposed legislation as well. What makes the Committee on Appropriations so special that they will not give us our opportunity to speak out and be interrogated as well by congressmen, because we have concrete proposals, concrete analysis, and but at the moment we can just submit our papers, and they may invite us to speak. May. Uh,
I know
so
it's still a big may there. When you take a look at the House Resolution 94, it exactly stated that you will just have observer status. Looking back
right.
at history, Jack, has this been
Yes.
done before? I mean, the House calls it unprecedented, but looking back to maybe
Yeah.
2022, it's happened before when you actually had direct participation as resource persons. How did that turn out for the budget of 2023?
Well, actually, not in 2022. I think it was the People's Budget Coalition that did some intervention on. Oh, that's no, prior to that, not 2022, because during the COVID years, it was when the people's initial years of the People's Budget Coalition. It was not yet called PBC then, wherein Ken Abante did the budget tracker, COVID budget tracker, and they did some proposals, and they insisted on increasing the budget for health, but they were they were able to win a little bit, not the entire proposal that was proposed, but much earlier. That's why we are saying that it's not unprecedented, because as early as 2006, during the 13th Congress, there's already a proposal that was adopted. It's a resolution adopted. It was sponsored by Erin Tanyada and TG Gingona, to allow CSOs to be resource persons. And we were formally invited, and the proposals of what we call the Alternative Budget Initiative of Social Watch was carried and presented in plenary by, of course, we couldn't speak in plenary because we're not members of the House, but it was re-articulated by Congressman Edsel Lagman. And so it was a very worthwhile experience for CSOs to be given due our day in court, so to speak. But and right now, it's sort of a step back on what we have already achieved, and
But you
that's
have
why.
written a letter, as I understand, to House Speaker Martin
Yes,
Romualdez, Jack, and you
right,
recommended a couple, including
right,
mechanisms for the open BICAM, as you can see
yes,
on the screen, and also including access to detailed budget documents and in machine-readable formats of the General Appropriations Bill of both houses. This is very detailed. Have you heard back?
correct. No, the only thing we have heard prior to the opening of Congress is that the Speaker is open to having, to opening up the BICAM process, open BICAM, and CSO participation, but just on an observer status. But as far as those first two bullet points, there are already existing resolutions that were filed. And by the way, the second bullet on the concurrent resolution, the Senate has already acted on it. The providing access to the public on journals, transcripts, etc. And if the Senate has already done that, why can't the House do it if they are already really sincere about opening the budget process?
Well,
The
let me bring
open
back
BICAM is
that
very
question back
important.
to you, Jack. What sense then are you getting from the House leadership on budget transparency? Because the leadership itself calls the participation unprecedented.
Well, you can always say, oh, sige, participate kayo. But the thing is, the terms of engagement and the environment where we are allowed to participate, so to speak, as observers, does not provide for complete information. Bottom line here, Cathy, is in the end, it's freedom of information. This is people's budget. We want the budget in machine readable format in Excel files. We want the budget tracker the open budget server wherein we can easily real time monitor the changes that they are doing from what the president has submitted in the national expenditure program to what they did after all those hearings. What are the changes, the tracking that needs to be done on second reading and on third reading and in the BICAM. We want real time, and we want those in Excel format so that we can easily monitor. Otherwise, it's all just, shop talk. I mean, you can say, sure, participate, but you're not giving us all the avenues so that we can really intelligently participate.
That this
Submit
is
what
so
you
critical
want.
because
Yes,
bulk of the budget is really going to debt servicing.
right.
So it really needs to be monitored that the budget that's allotted to social services really get to where they should, given the scenario we have of the ghost projects on the flood control projects. So what do you now intend to do, along with the bigger coalition, because you're not alone? You've got 20 others in the
Yes,
coalition of civil service organizations to try
yes.
and ensure that you do get resource persons and not just end up as observer status in the hearings.
Well, there are other members of the People's Budget Coalition that actually are being accredited. They have sought accreditation. So it's just Social Watch at the moment with our own affiliate or organizations that have not sought accreditation because we feel that it's best to know tell Congress that these are not the terms of engagement that we are looking for. I mean, we don't want just ceremonial uh, ceremonial and token participation. We want real participation. But there are others who, I mean, we gotta hand it to the others who really also strive to maximize those windows of opening. And it's a good tandem. What we intend to do is directly work with progressive legislators who can carry the proposals of Social Watch and articulate it because they can very well articulate what we are proposing.
Okay, well, hope floats
Yes.
then, getting those allies in both houses of Congress. And thank you so much, Jack Reyes Cantos of Social Watch Philippines.
Thank you, sir.
The Manila International Airport Authority, or MIAA, defends the impending terminal fee hike at the Ninoy Aquino International Airport. NAIA's private operator, the new NAIA InfraCorp, will increase terminal fees starting September 14, coinciding with the first anniversary of the privatization of the country's main gateway. Passengers on international flights will soon be charged 950 pesos from the current 550, while those on domestic flights will be imposed with a 390 peso fee from the current 200. The fees are the subject of a Supreme Court petition from a group of lawyers who argue that the increase would burden millions of passengers. But MIAA General Manager Eric Jose Ines said it is high time to impose a fee hike.
Yung pagtaas na yan ay nararapat na kasi unang-una matagal nang hindi nagtataas ang terminal fee natin at nangangailangan din. Kailangan tulungan din yung ibang ahensya ng gobyerno gaya ng Office of Transport Security. At pangalawa, maraming ginagastos ngayon ang NNIC para sa ating pagpapaganda ng ating paliparan.
Ines said the collected fees would be used for the construction of Terminals 4 and 5 and the installation of more electronic gates to speed up passenger processing. The next review of fees is scheduled after 5 years. The Securities and Exchange Commission has ordered 7 online lending platforms to stop operating for lack of proper registration. In separate orders dated August 15th, the SEC's Financing and Lending Companies Division issued cease and desist orders against these online lending platforms, directing the companies and their operators to halt all lending-related activities until they secure the necessary registration and approval. The SEC said unregistered platforms violate rules requiring disclosure of online lending operations and pose risks of abusive collection practices, unjust interest rates, and data privacy violations. The orders were issued under the Financial Products and Services Consumer Protection Act, or RA 11765, which allows the SEC to enforce such actions against non-compliant financial service providers. You're watching Money Talks. Coming right up, the country's foreign debt payments rise to $5.87 billion. And as BSP is expected to cut rates on Thursday, we speak to Carlo Capasillo of AP Securities. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The country's external debt service burden inched up in the first 5 months of the year as both principal and interest payments increased. Data from the Bangko Sentral ng Pilipinas showed nearly $5.9 billion were paid from January to May, slightly higher than the $5.84 billion settled a year earlier. Principal payments rose 2.3% to over $2.6 billion, while interest payments climbed 4.4% to more than $3.2 billion. The debt service burden refers to the combined principal and interest payments on loans, including amortizations on medium to long-term borrowings and interest on short-term credit lines. The Bangko Sentral said the burden remains manageable, accounting for 23% of export shipments and 9.3% of total exports of goods, services, and primary income. The Bangko Sentral ng Pilipinas is expected to cut rates for a third straight meeting on Thursday, August 28th, amid cooling inflation and slowing economic growth. A Business World poll of 20 analysts showed unanimous expectations of a 25 basis point cut, which would bring the benchmark rate to 5% from 5.25%. The Bangko Sentral has so far lowered rates by 125 basis points in August last year. It delivered two 25 basis point cuts at each of its meetings in May and June. Inflation eased to 0.9% in July, a six-year low, and well below the BSB's 2 to 4% target. Analysts say this gives the central bank room to ease further. Slowing economic growth may also be a factor in the Monetary Board's decision to continue its easing cycle. Second quarter GDP expanded by 5.5%, slightly higher than the first quarter, but still below the government's annual target range. Analysts noted that global headwinds, such as the U.S. tariff hikes and uncertainties in the Federal Reserve policy, may also influence the BSB's next moves. The Monetary Board will meet again in October and December, with some economists projecting additional rate cuts through early 2026. In the U.S., Federal Reserve Chair Jerome Powell has already built two arguments in opening the door for a rate cut next month. It's not the aggressive easing policy that U.S. President Trump has always wanted, but during the closely watched Jackson Hole conference, Powell acknowledged the tricky economic dynamics the Fed is grappling with, the underlying weakness of the labor market, and tariff-driven price increases.
Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed.
Meanwhile, Trump announced just this morning, Manila time, that he has fired Fed Governor Lisa Cook over alleged mortgage fraud. Trump can only remove a Fed governor for cause. Cook previously said she has no intention of being bullied to step down from her post. With us now for more is Kaloy Capasillo, stockbroker at AP Securities, Inc. Good to see you again, Kaloy. Welcome to the program.
Good morning, everyone. Thank you, Cathy, for having me.
Okay, so how are you advising clients then ahead of the BSP decision? Assuming that they do cut.
If they do cut, well, everyone is pricing it in already.
Are
so,
you as well?
Yes, I am as well. Personally, so we've been looking at it in a way that it's not isolated from the U.S. And right now, if we cut rates, the differential between the U.S. rates and Philippine rates would be just 50 basis points from a traditional at least 100 basis points. So you give enough incentive for investors to take risks with the Philippine peso. So how we see it is the BSP lowering rates is good for long-term investors, but not for short-term traders.
How
Right?
come?
So if you lower the rates, of course we're looking at those rates spurring economic activity, and we're trying to see GDP pull up to the higher end of the target of 6.5%. So it's something that you have to wait a little longer to trickle in. But for the short-term investors, you have a smaller differential from the U.S., and you might see a little movement from the Philippines going back if there's not enough incentive for the investors.
Okay, so
And-
there could be a way to skirt this, if you will, or maybe even game it. What are you then recommending for those who have held onto interest rate sensitive stocks like banks, property, because those will be impacted by
Oh,
the
yeah.
narrowing of the interest rate differential that we hadn't seen, coming down from 100 to 50 basis points.
Yeah, well, we've seen a lot of improvement in the property sector, but it's not as, if you would look back, we were at 7,000 when the rates were between 4 to 5%. So, and property index was much higher then. So I believe or I am hoping we go to that direction now. And we've seen the movements from Ayala Land, even Mega World that hasn't been moving much for the past year started to gain some traction. So we're already seeing it. And even the REITs now, of course, compared to their counterparts, look more attractive. So we're seeing a few more pushes for the property sector.
So that means to be more nuanced in the property sector and get into
Yes.
REITs.
Yes. I
Okay,
believe
what
so.
about for banks then, given what we've seen for the first half in terms of earnings, in terms of net interest margins and credit costs?
Yes. For banks, before it was easy to say that it's their income is directly related, but now they have so much things going on for them. So it's not as easy to say that okay, you lower the rates, their net interest margins move this way. It's not as easy to say that, but maybe on the loan sector, which is really a big part of the bank income, then we can see growth there, given again the property sector surging. So I believe there's also a lot of upside in the banks.
So which ones then?
I would still go for property first, only because they've been lagging for the longest time. The banks have moved relatively faster this year. So there's more upside, to say the least, in the property and then banks.
Okay, so what now happens to the dividend plays? Because for the most part of the uncertainty that we've seen in the last 7-8 months, most of the stockbrokers out there said, just get into the dividend plays because it's going to give you money back anyway.
Well, what we've learned, all of us have learned, is to be more patient given the post-pandemic scenario. And the average yield of the PSE is the highest level as it has been for the last 10 years. So yeah, we've been telling them dividends are actually a good play. So people are not as active trading. Like personally, I've been recommending Globe, and they say that that's very slow. But yeah, you don't want to play hero trading all the time. I said, like Globe now is in the lower end, maybe 1,600 with a stable 100 peso dividend. Right? So looking at that angle, I told them, well, you can sit on this one, you get your dividends better than any other rates that you would get, and you still have the pending GCash IPO if it comes in play. So you don't see a lot of investors dumping the stock just because that GCash IPO is still in play. So that's
Okay.
where we're playing it right now.
Which brings us to the e-gambling ecosystem, because there's been a delinking by the Bangko Sentral amongst the e-wallets in order to prevent people from just playing all they want on gambling platforms. But I see that AP Securities has put on a hold for DigiPlus, even as it got promoted, so to speak, to the PSCI index at the expense of Bloomberry, which you now have buy on.
Yes.
What explains that?
So we usually do the opposite every time there's a rebalancing. So let's say if DigiPlus was going into the index, so we would say that that's the time you step away from DigiPlus, because you have to take profits come the time it's included in the index, and we have to start investing on the one that's taken out. Only because if some people would understand, flows is more important than fundamentals, right? And as a market trader, you make money on flows, on money flows, than fundamentals in the short run. So now we've been thinking, okay, so Bloomberry is taken out. We don't expect a lot of outflows. We look back at the fundamentals. They're now reinvesting on e-gaming. And of course, the risk of regulatory risk is something else. But putting that aside, the business is doing good. So we're seeing a lot more upside for Bloom now than before. For DigiPlus, it's really hard to put a value on it yet. I mean, there's the range of valuations for DigiPlus is really huge. And given the volatility that we've seen, particularly in the last 4 weeks, it's not for a lot of people. That's what we can say. And then there's a lot of headwinds going on, although what's good to see is that they've also showed interest expanding in, I think, in Africa, in Brazil. In the business perspective, that's really nice. So we're hopeful that those things would actually work for a Filipino company.
All right, we'll leave it at that, and I'm going to take home that phrase, flows, money flows, very important. Thanks so much.
Thank
Kaloy
you.
Capasillo, AP Securities, joining us. Well, it's U.S. equities falling on Monday following Trump's announcement that he intends to place a stake on other companies just like Intel. The Dow declined by 0.7%, S&P 500 tumbled by 0.4%, and the Nasdaq slid by 0.2%. And looking at the U.S. 10-year Treasury yields, they've ticked up to 4.274%, and gold prices have declined to $3,373 per troy ounce. As for U.S. futures, they're pointing to a decline when the markets open later tonight, Manila time. The Nasdaq down by over 0.25%, and the Dow and the S&P ticked down by 0.1% each. Taking a look at the Asian markets, they're tracking Wall Street declines this Tuesday. Japan's Nikkei 225 tumbling by over 1%, South Korea's Kospi sliding by over 0.5%, and Australia's ASX 200 is down by 0.33%. And a look at our own markets, starting trading on this truncated work week. PSCI resuming trading this Tuesday in the red. The local bourse down by 0.25% at 6,267. Analysts expect stocks to rise following Powell's Jackson Hole speech and ahead of the Bangko Central's Monetary Board meeting this Thursday. As for the Philippine peso, it opens today stronger, 56.70 to the dollar from Friday's close of 56.95 against the greenback. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.